Well, hi everyone, and welcome to this week's edition of Feeling Smarter. As always, I'm joined by my co-host Tim Miller. G'day, Tim. How are you?
Going pretty well, Aaron. How are you doing?
Very well, thank you. Well, today we're going to be continuing our discussion around the investment restrictions within a self-managed super fund. And we are going to explore specifically Section 65. And 65 within the SIS Act looks at the prohibition around financial assistance. So, Tim, can I get you to kick things off around the meaning of financial assistance and ultimately the concept of using the resources of the fund and when that financial assistance is given to a member of the fund or a relative of a member of the fund?
Yeah, so we'll jump straight at. I mean, let's go straight for the jugular with the financial assistance piece there, Aaron. But it's a good question because to make I guess a leading statement is that Section 65 has two prohibitions in it. Right, the first one is that the fund is prohibited from lending money
Yep.
to a member or a relative of a member. So that's pretty straightforward. It takes on the concept of what is a loan. So it's clearly, hey, here's some cash, or
Yep.
here's credit, and you need to repay me, right? So that is prohibition under 65 1A, right? And then you got 65 1B, which is that the trustees cannot provide any form of financial accommodation to the members or the relatives of the member. And so then we need to understand, well, what does financial accommodation mean? Because we understand that we can't give money, right?
Yep.
Not to suggest that doesn't stop people from doing it, but we can't provide money to the member or relative, but any other form of financial accommodation. So then we need to look more broadly at what that means. And I think, for our journey through the SMSF space, we know the Commissioner has provided a lot of technical background to a number of the key investment restrictions through their SMSF ruling program, which was really sort of at its peak in 2008 through to 2012.
Yep.
And in SMSF, and probably the first one they did, or one of the very first ones they did, was SMSF ruling 2008/1. What does it mean to give financial assistance to a member or relative? And ultimately, it lists quite a number of things that you're looking at there that will be defined as financial assistance. But I think also importantly, and this is where I think this is one of the really good rulings, it also sort of tabulates by going through a whole heap of examples and says, is this or is this not financial assistance? And I'll go through a couple of concepts in a moment. But then it says, whether it is or it isn't, what other sections of the SIS Act or SIS regulations would this transaction potentially also be in breach of? Which is one of the great things, because the tax office have a history of just answering the question you ask them specifically. So is this a breach of Section 65? Yes
Yep.
or no, without factoring in all the other elements to it. So that's why I find it to be quite a good comprehensive ruling. But what they're looking at from a financial assistance point of view is such things as, okay, did the super fund purchase an asset from a member, and did they pay more than they should have? Right now, again, we've also got an acquisition of assets from related party rules to deal with, but we're talking about that sort of concept. Did the fund sell an asset to a related party and sell it for lower than commercial value? So again, there's no actual SIS restriction there, right? And there's an arm's length one, but
Yep.
it doesn't breach the acquisition rules or whatever. So
Yeah.
you
And I was
got
just going to say there that it's interesting because some of these areas we've obviously had a lot of conversation in the past few years around the income tax issues of gnarly,
yeah.
around the acquisition of less than market value as opposed to the context of greater than market value. And whilst gnarly doesn't impact the sale of that asset rather than the acquisition, these are all things that kind of counterbalance the way that the laws are meant to work insofar that we're acquiring assets at their market value.
Yeah, that's right. And if you dig to the crux of the whole issue, it's that they ultimately they bring it all back to the sole purpose test and the concept
Mm.
the concept that superannuation and self-managed super fund in our instance is not there to provide any sort of current day financial benefits to the members, until that current day is the payment of a pension or the payment of a benefit once you've satisfied the appropriate condition of release. So the purpose of the fund is there to provide benefits in retirement, provide benefits upon turning 65, whatever the case may be. But, we don't want to provide any other sort of financial support. So we don't want to accommodate, or we don't want you to utilise the assets of the fund to be able to provide you with a benefit in today's existence, prior to you actually legally being able to access that money as such. So, there is a broad range of things that are going to fit under that financial accommodation issue. And it's the more indirect financial assistance that can be captured under 65 1B that people have to be mindful of. And what I'm talking about there is things like, we know it's genuinely acceptable for a self-managed super fund to acquire business real property from a related party. We also know that it's an exception to the in-house asset rules to then lease that business real property to a related party, right, on commercial terms. So it's where we start to talk about gnarly and things. But what we don't talk about often is the rent payment, right? And when is that rent payment made? Now, people run into all sorts of issues with regards to the payment of rent, and often there'll be a delay, right? Or there'll be non-payment of rent. Now, one party, being the member, not paying rent is not the provision of financial assistance if the trustee hasn't said, you don't need to pay it, right?
Yep.
Now, if the trustee says you don't need to pay, that's financial assistance.
Yep.
But also, under normal commercial terms, as the owner of that property, you would have a mechanism in place to collect that debt, right? And
so you go to your lease agreement and you're looking at your terms and conditions that effectively govern the way in which that lease is operating.
Yeah, that's right. So that's really what the commissioner is angling at with a lot of these sorts of things is, what are you doing outside of commercial reality, right, that is giving some form of financial accommodation to members or the relatives of those members. And if you're engaging in that sort of activity, then you are potentially in breach of Section 65, and you need to rectify that situation. Now, it might be about, just following the right protocols to collect debt or whatever it might actually be. So there is a range of activities that can lead down that path.
Yeah, and I guess you made this comment before, but I really highlight it again. These are areas when you go through the audit process that you don't typically see the breach in isolation. You end up seeing that it's a Section 65 breach, but it then probably also might reference back to sole purpose or in-house asset or whatever the case may be. So it is important when you are looking at some of these investment restrictions, and Section 65 here around loans and financial assistance is a really good example, that you don't take that singular approach to the transaction. You actually need to broaden, I guess, your understanding of what it might look at, and ultimately, are there trade-offs in actually the way in which that transaction might occur? Because, as you sort of went through and raised a number of those areas where the commissioner may view a contravention of 65 1B, we need to make sure that we might be closing the door and satisfying one part of it, but we've actually blown out the windows at the back, which create a whole new set of problems. So I think that's a really important message that people need to understand about when you're looking at these investment restrictions, that you're not taking that singular approach.
Yeah, and I think probably if I was to give one more example, which I think is a great example in this financial assistance thing, it's that whole Section 66 acquiring an asset from a related party, and no more clarity can you get than from looking at the merchant case, where in the merchant case, the self-managed superannuation fund acquired listed shares from the family trust. Now, you look at that in isolation, you go, there's no breach of anything there.
Yep.
However, by expansion of the transaction, the acquisition of those shares from the family trust created a huge tax loss in the family trust that was able to offset a huge capital gain within the family trust, which ultimately provided a major or very significant tax benefit to the member. So there's no breach of Section 66 because they were listed shares, so we can do that. But the flow-on effect of the transaction, and this is the thing we always have to look at with acquiring shares, is why are you acquiring those shares? Are you acquiring them because of the potential for income and growth that they're going to provide in retirement? Or are you short of cash on the outside and you'll want to sell down these assets and use superannuation money as a way to do it. And you know, that's the nuance and the tight line that we walk between breaching 65 and not breaching 65.
Yeah, and so you know that timing issue of saying, well, do we try and inflate the price for a particular service or an acquisition or whatever it is? Yep. You're then going to fall foul of some of the issues that were spoken about, or on reverse forgiving debt, you know, owed to the SMSF by a member or relative. So these are all things that are really important that we understand not only the specifics of Section 65, but also the broader aspects of how the SIS Act and regs might apply, and also and equally from a taxation point of view, where we know the ATO's had a much greater focus around non-arm's length income as well.
Yep, absolutely.
Excellent. Well, thank you once again for your time and brilliant contribution as always, mate.
No worries, always a pleasure.
Excellent. Thank you, everyone. And we look forward to seeing you for our next edition of Feeling Smarter. Bye for now.
See you all.